Hello, Jarrett Lau here with Profitable Properties Boston. One of the most common questions that I get is, what type of loan should I get? Should I do a 5-year term, 7-year ARM, 30-year fixed? What I mean by that is usually the length of time in which the interest rate in which you initially get is going to be locked in or stays the same. Right? So you might be getting a loan and it's 3%. And that 3% is great, right? And you're happy with it. And if you can keep that rate forever, you're going to stay at that same profitability as your rents go up, and we try to minimize all other expenses. However, the banks, the way it works is that they give you better rates as the risk goes up. So the shorter the term, which means let's say 5 years, that 3% rate stays the same, they're going to give you that at that amount. However, if you wanted a 7-year, which gives you a little less risk, that rate might go up a little bit, like a quarter or eighth of a point. Then if you want a 30-year fix where you want it to stay the same forever, that rate might even be a little bit higher than that, right? So it's a risk versus reward type of situation. So people come to me all the time and say, Jarrett, well, what is it that you do? Well, first and foremost, 30-year fixes are typically only possible for residential investors that just starting out, maybe less than 10 properties. Once you get into the commercial loan aspect of it, and we'll talk about that in a different video, it actually only becomes 5 or 7 year, maybe a 10-year term. But I typically will get 5 years, maybe 7 years. And why? Because at the end of the day, my goal is to be able to actually take that money out of the property after the equity builds up. And that equity builds up through, again, appreciation or rent pay down. Right? And sometimes if it's a really low interest rate, you're paying quite a bit of principal every single month, which goes into your pocket. So even after 5 years, you might have $120,000, $150,000 in equity that you can pull out to be able to help purchase another property. Right? It's very rare that something doesn't happen where you don't want to interest rate refinance. Right? So every single time you refinance, that 30 year, it doesn't matter. So if you had it for 30 years at that 3%, and then suddenly the market goes to 2% and you wanted to save money and refinance, that 30 years didn't do you any good. So I really look at it and suggest to other investors 5 to 7 years, because in 5 to 7 years, that equity builds up enough for you to refinance out, or it gives enough time. But at the end of the day, it's going to be your decision of that risk versus reward. But it's rare that someone for 30 years doesn't actually take some money out or refinance to a lower rate. So if you or anyone else you know is looking for a real estate brokerage house that specializes in investment properties and can guide you through different situations as picking out the right loan and term length, please think of Profitable Properties Boston.